Take a closer look at the markets. I do mean markets, stocks and bonds. Start with Komal Sri-Kumar, president of Sri-Kumar Global Strategies, David Bianco, DWS America's chief investment officer. Sri, things are sort of playing out as you expected, or at least as you told us you thought they would. We may see 4%. You're not ruling that out, but you have said for a while that will probably be close to the highs for the 10-year, and the markets still just don't believe the Fed. And you say there's good reason for that. Why should they?
Exactly. I stick with both my positions, Joe. I think we have come down from the 420, 425 level to today trading just below 350. And the distrust in the Fed and wanting to have a rally no matter what Fed officials say is still going on. That is a major problem for the Fed. Whether the 10-year goes back to 4% or it just stays at 350 to 375, the Fed needs to be controlling the rhetoric. It needs to be controlling the market. It is not. The fallout for investors is that as a result of that, the Fed will have to do a lot more to convince markets, which they are not going to do readily. For instance, next Wednesday, I think they should raise rates by 50 basis points, even though the common expectation is a slowdown to 25. If you do that, you're going to give more ammunition to the market to distrust the Fed in future months.
David, you have some similar thoughts, I think. I don't think the stock market is going to be able to enjoy its recent successes because it just feeds it's actually counterproductive for future gains because it makes the Fed's job harder the more rally we see in the averages.
Yeah, good morning. And the Fed's job is hard. It's important that it keeps control of markets and market expectations and continues the inflation fight. We do think the Fed hikes just 25 basis points next week, but I've got sympathy for the idea that maybe the Fed is easing off on the brakes a little too early. Nevertheless, we do think that long-term yields climb probably when we get past the debt ceiling fight and past the worst of the slowdown that we expect in the economy. Yeah, the 10-year Treasury yield probably does get to about 4%. So between overnight rates at 5% or higher and 10-year Treasury yields at 4-ish%, this is a powerful alternative to equities. But let's stay focused on earnings. It's earnings season. We're about a third of the way through it so far. So far, it's mixed in terms of results and stock reactions. Stocks aren't going down in a big way, but normally during earnings season, stocks rally. We haven't really seen that either. So we'll continue to watch the earnings as they come in. But what we're seeing is that we're on track for flat earnings, maybe slightly down earnings sequentially as well as year on year. And that's probably the best that we get all of 2023 as well.